Nvidia is currently trading at $124 a share and is up almost 160% from the start of the year, easily beating S&P giants such as Apple, Amazon, and Tesla. What we're going to be doing today is looking at the company financials, seeing it's a buy, and using my automated stock valuation spreadsheet to see if it's a buy based on discounted free cash flow model, the comparable companies model, and the Ben Graham formula for intrinsic value. Check out my Patreon if you're interested in this sheet. But as I said at the start of the video, Nvidia has been on an absolute tear. If we look at the 5-year chart, this is up almost 3,000%. If we were to compare for the SPY over that time, the SPY is up almost 100, whereas Nvidia is up almost 3,000. If we compare it to Apple, up 300%, 10 times the growth. Amazon blowing that out of the water. Even Tesla up 1,300%. Does not touch Nvidia, being on one of the greatest runs of any stock all time in this last 5 years. So let's have a look at my automated stock valuation spreadsheet. What we do here is we type the ticker into here, and what this will do is it will load all of the latest company financials that are available, and then we can use the discounted free cash flow model, comparable company model, to see if it is a buy or a sell. Now, as I said, Nvidia, $124 a share, market cap of $3 trillion, very high PE ratio at 72.9. The average of the market currently is actually 29, so much higher than that. Beta of 0.196, sorry, 0.36. 0.63, easy for me to say, which means it is a lot more volatile than the market. Shares, we'll discuss the shares in a minute. 24 billion. They had a 10-to-1 stock split that brought the price from 1,000 to where it is currently. And analysts are also saying there's a buy with a target price of 137. They do pay a very small dividend, 0.03%. A very safe dividend because they're not going to certainly not break the bank to pay that. Now let's have a look at the revenue. Obviously we want this to go up, and there has been exponential growth in Nvidia's revenue. As you can see, it is hitting all-time highs in the trailing 12 months of almost $88 billion in revenue, up from its all-time high of 60, and then up from its prior all-time of 27. So this has been exponential growth over the last, well, it has been quite consistent. You can see it doubled every 5 years, and then again, and has shot off in this AI boom over the last year and a half. Is the net income a similar story? And the answer is yes. 37.5 billion over the last 12 trailing months, compared to 30 in 2024. And then obviously they had previous highs of 10 billion, so it has gone from strength to strength. Free cash flow, no surprises here, up to 30 billion. That's a 5-year CAGR of 50%. What more can I say, really? It is generating lots and lots of free cash flow as other companies buy what they're selling, because they're the only ones in town at the minute. Shares outstanding. Now this isn't exactly right because of the 10-to-1 stock split, and also this was a 4-to-1 stock split, or 5-to-1 at this time. Probably 4, looking at the maths. But anyway, you can see that they have over the last few years consistently bought back their shares. Which, why is that good? Well, it means that Nvidia think they're actually underpriced. Assets versus liabilities, more assets than liabilities, which is great to see. Now, normally I would spend a lot of time looking at the discounted free cash flow model. This is using free cash flow, calculating future free cash flows, discounting today's value to give an intrinsic value. Now, discounted free cash flow model never likes Nvidia. They can say it's currently a $20 stock. Let's just have a look at the numbers here and see if we're fair. Now, this is, we'll even go on the high side. Let's say they can grow 40% over the next few years. Net income margins, let's say it stays where they are at about 61%. And even then, that's still a $30 stock. So we won't spend too much time at this. And I also don't think the Ben Graham formula like it either. Nvidia's growth based on, actually it's a bit closer actually, but Nvidia's growth based on analyst estimates, they're expecting around about 46% over the next 5 years. With the AAA bond of, the corporate bond yield of 5.12, this is quite high. So obviously Ben Graham would not care for this, but still an $80 stock. Now, if this was, oops, sorry, let me do that as a percentage. Yeah, if we would back down it at 3%, then Ben Graham would actually think this is a pretty good investment. But because of these high yielding bonds, he would say best to stay away. Now, finally, we're going to have a look at the comparable company model. This is a way of valuing companies by looking at their competitors in similar size using metrics. Now, if I do look at what I would say are Nvidia's competition, for example, AMD, Intel, and we'll also go with Qualcomm, or QCOM as the ticker is. What this automated sheet will do is we'll load all the other companies' financials so we can compare. But please check my Patreon if you're interested in this. I have a few happy customers and they're very happy with this sheet and they do use it often. Now, as I was saying here, in terms of enterprise value, there are no companies in their similar region that have a same price. Now, Taiwan Semiconductors would be kind of similar, but we can't look at that because of the financials on this not being in dollars, where it has a problem. Hopefully I can fix that in the future. But it is 10 times the size, at least, of any of these companies. If we look at the enterprise value. Now on the revenue, 87 billion to 23, 55 and 37. So Nvidia is number one in revenue and the growth rate is massive, almost 40% compared to the other ones. Now yes, AMD has had good growth, which is excellent to see. EBITDA, it is winning as well, 50 billion compared to 10, 11 and 4. EBITDA is earnings before interest, taxes, depreciation, amortization. Net income, easily the most profitable company here. Now, Qualcomm is looking good, especially if we look at these profit margins. Nvidia, once again, league of its own, 43%, whereas Qualcomm has 23%, and then AMD coming in next with 6%. These are some quick metrics I like to look at. This is price to sales, price to book, and PEG. We'll quickly touch on price to sales and price to book. This is the price compared to its revenues and the price compared to its assets minus liabilities. Nvidia is the highest. Now, normally we'd say higher is more overvalued and lower is undervalued. But if you look at these, then Intel would be a buy. And as people have seen, if we were just to look at Intel's chart over the last few months, I think that it has gone down 50% in that time, so not always looking at these as the best. But one thing that is interesting, if we look at the PEG ratio, which is the price to earnings ratio, this is 1 is fairly valued, under 1 is undervalued, and more than 1 is overvalued. But Nvidia and AMD are similar, and Qualcomm is actually the lowest. Now, these are the metrics that we're looking at: EV to EBITDA, EV to revenue, and PE. And this will give us a fair value. So if we look at all 3 of these companies, or 4 of these companies, you can see that PE is actually the place where Nvidia is shining, and it does say it is undervalued. But if we take an average of all these, it is actually closer to overvalued right now. Now let me just move this here. We'll go QCOM here, and we'll put Intel there. And then we'll go to the other sheet just to do a more direct comparison between Qualcomm and AMD. Once again, this brings the stock price up to about an average of 100, which is closer. And then also we compare them to AMD directly. It does actually say it's a buy, $135 a share. So this is why it's good to have all these different ways of measuring companies' prices, because obviously we have free cash flow doesn't like it, Ben Graham formula doesn't like it, they've never liked this. But if you look at similar companies in their size, you can compare Nvidia, and you can see that there is a case of still a buy even with this massive growth. Right guys, thanks for watching. Please give a like on the video if you enjoyed it. Check out my Patreon, and I'll catch you guys next time.